When engaging in real estate transactions in Manhattan, it is imperative for sellers to understand the implications of capital gains tax. Capital gains tax is levied on the profit made from the sale of property and is a key consideration for any real estate transaction in New York. Capital gains tax for selling real estate in NY. In New York, capital gains tax is applicable to the sale of real estate, including properties sold in Manhattan. The tax is calculated on the difference between the selling price and the adjusted basis, which is the original purchase price plus any capital improvements minus depreciation. In Manhattan, where property values can appreciate significantly, understanding these tax implications is crucial. The role of residence time in determining tax rates. Residence time, or the length of time the seller has owned the property, plays a significant role in determining the capital gains tax rate. If the property was owned for more than 1 year, the gains are considered long-term and are taxed at a reduced federal rate, which can range from 0% to 20%, based on the seller's income. How New York's taxation differs from other states. New York's approach to taxing capital gains stands out compared to other states. Some states do not impose an additional capital gains tax or may have lower rates, making New York's policies particularly stringent. Moreover, the combined state and city tax rates in Manhattan can lead to a higher tax burden when compared to sales in states with no income tax or those that offer special capital gains exemptions. Determining your real estate capital gains in New York. For individuals selling real estate in Manhattan, calculating the capital gains accurately is an essential part of the transaction process. You can calculate your capital gains through the following steps. Calculate your initial investment, typically the sum of the purchase price and any associated costs or fees. Enhancements to basis can include reinvested dividends for stocks and other contributory elements. Ascertain your net proceeds, which are the selling price less any related costs or fees. Deduct the initial investment, the amount you initially paid, from the net proceeds, the final selling price, to find the net profit or loss. A financial gain results if your sale price exceeds your initial investment. Conversely, if your sale price is less than your initial investment, this constitutes a financial loss. Determine the tax rate that would apply on your capital gains depending on how long you have held the property, whether you are filing individually or jointly, and whether you are the head of the household. The impact of federal capital gains tax on New York sales. When selling real estate in Manhattan, it is not only New York state taxes that a seller must consider but also the federal capital gains tax. This tax is applied to the profit from the sale of the property and can significantly affect the total amount owed by the seller. Federal tax thresholds for single and married filers. Federal capital gains tax is contingent upon the seller's income and filing status, and it is classified into 3 main brackets. For a single filer, as of the knowledge cutoff in April 2023, the long-term capital gains tax rates were 0%, 15%, or 20%, depending on the total taxable income. Married couples filing jointly have higher thresholds for these rates, potentially allowing them to benefit from lower tax rates on capital gains. You will not be subject to federal capital gains tax if your income falls below certain thresholds based on your filing status. For single filers or those married but filing separately, no capital gains tax applies if the income is $41,675 or less. There is no capital gains tax for married couples filing jointly or qualifying surviving spouses with an income of $83,350 or less. Individuals filing as head of household are exempt from capital gains tax on incomes of $55,800 or less. The federal capital gains tax rate stands at 15% under the following income ranges, which also vary by filing status. Single taxpayers will encounter a 15% capital gains tax rate on incomes over $41,675 and up to $459,750. For those married filing separately, this rate applies to incomes over $41,675 and up to $258,600. Married individuals filing jointly, as well as qualifying surviving spouses, will be taxed at this rate for incomes over $83,350 and up to $517,200. For heads of household, the 15% rate is for incomes over $55,800 and up to $488,500. When incomes surpass the upper limits of the 15% tax bracket, the capital gains tax rate increases to 20%. Single filers are subject to this rate on incomes exceeding $459,750. The 20% rate applies to married individuals filing separately with incomes above $258,600. For married couples filing jointly or qualifying surviving spouses, incomes over $517,200 fall into the 20% tax bracket. Heads of household will see the 20% rate on incomes greater than $488,500. Interaction of federal deductions with New York state taxes. The interplay between federal deductions and New York state taxes can be complex. While federal tax law allows for certain deductions that can lower taxable income, not all these federal deductions may be applicable to New York state taxes. For example, the state of New York requires taxpayers to add back certain federal itemized deduction amounts when calculating New York taxable income. Capital gains exclusions and exemptions for New York homeowners. In Manhattan, as in the rest of the United States, certain exclusions and exemptions may apply to homeowners when they sell their primary residence, potentially reducing their capital gains tax liability. It's critical for sellers to understand these provisions to take full advantage of the available benefits under New York real estate law. Eligibility criteria for the Section 121 exclusion. Under IRC Section 121, homeowners may exclude up to $250,000 of capital gains from the sale of their primary residence if they are single, or up to $500,000 if they are married filing jointly. To qualify for this exclusion in New York, homeowners must meet specific eligibility criteria. Ownership requirement. Use requirement. Frequency limitation. Legal strategies to minimize capital gains tax in New York. For property owners in Manhattan, capital gains tax can represent a significant financial burden when it comes time to sell. However, with strategic planning and a clear understanding of New York real estate law, there are legal avenues available to minimize this tax liability. Best practices for timing the market and sale date. Timing the sale of a property can have a notable impact on the capital gains tax owed. Here are some best practices to consider. Assess market conditions. Long-term versus short-term gains. Tax bracket consideration. Year-end selling. Navigating capital gains tax with professional help. In the context of Manhattan real estate transactions, where the stakes are high and the regulations are complex, enlisting professional assistance is not only advisable but often necessary to ensure full compliance with tax laws. Real estate attorneys, along with tax professionals, play an integral role in the accurate handling of capital gains tax implications. How an attorney can facilitate accurate tax calculations. A real estate attorney can provide invaluable assistance when calculating capital gains tax, ensuring that all aspects of the transaction are legally sound and financially optimized. Interpreting tax law. Determining basis and adjustments. Identifying deductions. Handling complex scenarios. Document review and preparation. Representation. The advantages of early legal guidance in real estate sales. Engaging a real estate attorney early in the process of selling a property in Manhattan offers significant advantages. Strategic planning. Risk management. Compliance assurance. Negotiation support. Peace of mind. Comprehensive and tailored assistance. Contact Avenue Law Firm today. Delving into the details of capital gains tax in New York is essential for property owners looking to optimize their financial outcomes. The team at Avenue Law Firm is well versed in the multifaceted realm of New York City real estate law, poised to offer clear-cut counsel that aligns with your tax obligations while pinpointing strategies to potentially lessen your tax liabilities. Forge ahead with confidence in your property transactions. Our attorneys are equipped with a deep understanding of tax laws to guide you toward informed and compliant decisions. Engage with Avenue Law Firm, and let our knowledge serve as your guide through the complexities of real estate taxation, aiming to provide you with a sense of security and a favorable financial position in New York's dynamic property market. Connect with Avenue Law Firm today at 212-729-4090 for quality assistance and get the peace of mind that your property dealings are as financially efficient as they are compliant.